Yeah, so today we are going to learn about more of time frames. Yeah, what time frame is. So in today's video, let me just jump right into it. So we have different times. So when you see there's the tool for the time frame. So when you see, because I've favorite the time frame, you can see my preference, the time frame I prefer to look at. But if you're a new beginner and you're looking at time frames, so wherever time frame you are on, you see it like this. So if you want to select, you go here, tap on this side. Wherever I selected a time frame, this time frame, you see that the chart automatically change. What it means is that every candle, this is a daily candle. So when I'm on the daily, so every candle has what? Every candle is produced 24 hours. So this one 24 hours. No, this one is not fully from this Friday. So this is not fully from. And this is 24 hours. A full 24 hours. A full 24 hours. So another candle. So each candle is 4 hours. Each candle is 4 hours. Each fully formed candle is 4 hours. So there's the current candle. It's forming. So on the smaller time frame, it's the smaller time frame that adds up to form the bigger time frame. So for instance, what I meant is that when you have 15 minutes, there's a 15 minutes all added together that will form a bigger time frame. So let me show you how it forms. So let's say we have let me use the 1 hour. Oh, sorry. Let me use the 1 hour. Let me add the 1 hour and the 30 minutes. Okay, so let's use this previous candle. This one is not yet formed. Let me use this previous candle. So if you can see, this candle closed right here. This candle closed right here. So we have the wick. That means the candle went up. The candle went up and came back to this zone and closed around this zone. So if you put your cursor on the candle, you can see every detail at the top here. This side. You can see every detail at the top here. This side. So we have the opening, we have the highs, we have the lows, and we have the close. You have the close. So when you put your cursor on it like this, you see it will give you all the details. So the opening, we have 3,338 dot 370, and then with the high, we have the high is the highest. So you can see, let me plug it. Immediately I plug it, you see that, you see what I'm talking about. So let me plug it. Check the coordinates. Okay, let me 3,004.
342.4. I want to be accurate. Highs.
Then the opening we have 3333837. The lows we have 3338.105.
Then the close
we have 340940. Okay, so now let me plug in this one coordinate. This is the highs.
The highs we have
334 is 4430. And now let me name it highs. So we have the highs. Then after that we have the lows. Now let me plug in the lows.
The lows is 33.
Okay, sorry. 3381.105. And then text we have lows. And after that we have the opening and the closing. So the opening is right here. You know, the closing is right here. Let me change the coordinates.
Close is 40. 40
940. That's the closing. And the opening is 338. I'll just change this on 770. So this is the opening and this is the closing. Let me name it. Opening consistent. So as you can see, we have the opening, we have the closing, we have the lows, we have the lows. So let me explain why this is the opening and this is the close. So when we come back to this candle, it will be the other way around. So the other way around will be, right now we'll have this as a we'll still have this as the highs, then we'll still have this as the lows, but we'll have here as the opening. We'll have the same figure as the opening, then we'll have here as the close. So you get it. We'll have here as a close. Why? Because when the candle, so let me explain it. So this candle opened right here. I'm going to explain the time frame too, but I want to explain the candle, how they form. So this candle, the first thing it does was it opened, this one closed around the zone, and this candle opened, came down here, formed a wick and now goes back to the opening again and now goes up to this point, and when it was about to close, then that's when you see the candle melting. So it closed around this region, this zone, it closed around this price, and now the next candle picked it up from here, the same price, open here, went up a little bit, went up but didn't break the previous high, and came back, melted again, and came down to this side, and now when it was time to close, it went up again and close around this region. So there's the closing. Same for this one too. We pick the closing from here, price opened from here, price opened from here. So after this closing, we had the opening from here, this candle opened from here, came down to this side, now, and now went up again, when it's about to close, and it came down again. I will say the same for this one too. It came down again. Now you can see that it's changing. So when it's going up, that's when you see that the color, because I've customized my color to be blue, when it's going up, you see that the color is what? Blue. But when it's coming down, it's black. Yeah, on your chart it might be different because you've customized yours to be most often is red and green. The green means it's going up and the red means it's coming down. So that's the two different colors. That's the two different default colors. Okay, so now let's head back to the time frame. So now the time frame, what I was explaining is that this candle is an hourly candle. So this is a 1 hour candle. This happened over an hour. So let me explain using this. So we have 30 minutes, right? So let me paint this one. Let me see then we'll see what happened inside the hourly hour. I don't know whether let me use this vertical line instead. This side. I'm not sure I can get it very accurate. I need to use a candlestick, the body bar. That's not allowing me, so let me just use this side. Let me see whether I can duplicate this. Oh. Okay, I've gotten it. Alright. So let me paint here. Why? I was just supposed to open it. Let me paint here. Background. I'm painting red. Let me paint it blue. So right now, when I go to the 30 minutes, you see that we have under this, we have what? Two candles. We have this and this, making up the hourly candle. You have this and this. So when you go down further, you see that okay, we have when you go to 15 minutes, let me make this one. When you go to 15 minutes, you have that we have 1, 2, 3, and 4, making up the hourly 5. Sorry, it's 5 candles. So 1, 2, 3, 4, and 5, making up the hourly candle. Or is it 4 or 5? I think it's 4. Yeah, I think it's 4. It's supposed to be 4. connect for. So this, and so when immediately this one close and this one open, making up the hourly candle. So do you understand? Yes. So when you go down, deep down, let me go to the 5 minutes. You see that the candles becomes what? More and more and more and more, starting from here and ending around this zone. Yeah, this is the last candle. Ending around this zone. So this was what happened so each candle represents 5 minutes. So this 5 minutes candle, this 5 minutes, 5 minutes, 5 minutes, all adds up to make an hourly candle. Yeah, I think so. When you go to the daily too, you see that we have daily candle. When you paint this, let me pick it. Okay, when you paint it, so these are the time frames, and these I've explained how the candlesticks form, and I've explained how the two of them form. Both right now I'll be using the terms often. You have the bullish candle, which is my custom color. So if you want to customize yours, you can go settings, then you come to symbols, then this you have the body, you have the borders, and then we have the wick. So you can see mine is blue. So if I change immediately, I change it, I can change it to green. Change it to red. Change it to blue again. So you can play with the colors, the one that you can resonate with. But I prefer this blue. So right now you'll be asking yourself, why the candles? Why is the candles separated into? Why do we have different types of time frames? So we have the 15-minute, and what am I supposed to use, and all, depending on you, what am I going to use a candlestick for? The time frame, what am I going to use a time frame, or depending on you, what time do you want to be trading, or what do you want? Do you want to be a scalper? You have scalpers who trade from they take positions. We have the 1 second chart, from 1 second to scalpers most of the time 30 minutes. Yeah, you take positions and they enter at a certain point in time, and they close. These are few minutes and they are done. And they are done with that particular trade, and they move on to the next. So they take numerous trades. So you can become a scalper. So on the scalper, you need to play with this with this type of time frame. You need to play with a smaller time frame. You need to play with a 1 second. We have 1 second. We have 15 seconds. We have 5 seconds. We have 3 minutes. We have 1 minute. So we have the 1 minute chart too. Yeah. So as a scalper, that's what you need to play. That's your time range. Then after that, you have the day trader. Day traders move. I can also say from 15 minutes to, let me say, 1 hour. Then we have the swing traders also hold position for long time, let's say a week, 2 weeks, 1 month, 2 months, 3 months, 4 months, even a year, entire year. You can see people holding trade. So most of the time, those people, they look at the 1 hour to, so the 1 hour, the H1 candle to, oh no, let me be real. They look at the 4-hour candle. 4-hour candle to let's say the monthly time frame. We have the monthly time frame. So depending on the type of trader that you want to, do you want to always be on the chart? I can tell you, everybody can become a trader, no matter how busy you are. You can become a trader. If you are working, you can become a trader. You can be looking at the 4-hour time frame, because when you look at the 4-hour time frame, let me switch to the 4-hour time frame. When you look at the 4-hour time frame, so you have every 4 hour you look at it. So you set an alarm. Every 4 hour you look at the chart. What is happening? Did I get an entry? I don't have any entry. Okay, let me just move on. Let me just move on with my day. So every 4 hour you check up on the market. You check on the market. Check on the market. What is going on? Do you understand? Yeah, what is going on? Oh, depending on the type of trader that you want to become. If you have more hours to spend on, you can become a day trader. But you need to put in the reps. You need to be disciplined, and you need to stick to whatever you want to become. But you can try all of it. I'll advise you to try every bit of it to know that, okay, what do I resonate, or what do my features resonate, because everybody is unique, and you being unique, you need to find your own truth in the market. I can teach you, I can give you the coordinates, but you need to actually sail the boat to your final destination. So yeah, so I'll add my time frame, 15 minutes. I like the 5. I like the 3. I don't like the 1 minute. So I like the 2, and then I like the 4. So those are the time frames I like. I like to look at. You can see gold is, today is a holiday, but I don't know why gold is giving us trade setup like that. Gold is giving us trade setup. Alright, let me change this color to my. Okay, so now let me talk about the tools. Let me talk about the tools right now. So the tools are just there. We have people that trade without the tools. The tools are just there to emphasize the zones that you be watching, because you need to have your decision made up before you execute a trade, and you need to plan your trade, what you are going to do. So these are the two. You see your two panel over here. This is your two panel, and you can favorite them. When you favorite them, you get them here. If you want to, you favorite them. So you can go here, and whatever that you want to draw. If you want to use a horizontal array, you use a horizontal array. Then you can customize your colors. And customize the width of it. Yeah, we have the vertical, and we have the straight line. So depending on whatever you prefer, your preference, I can change the colors, make it black, change the pixel, make it a little bit bold. Yeah, so this is just there for you to emphasize on the price or the zones that you are looking out for. So for instance, if I'm looking out for this zone, I just put this box over here. I'm looking at this whole candle. It's a zone for me. I don't want to look at the exact price. I just want to look at this entire zone. So when price comes to this entire zone, I know what to do. People use just the line, just the horizontal line. People use the horizontal line, but I use it for another thing. I use it to emphasize on just a price, certain price. But if I want to a zone, if I'm looking at a zone, I use the box. This, let me check the name. This is a rectangular, a rectangle. So these are the and when you want to measure your pips, by now you should know what a pip is. When you want to measure your pip, so every price movement is we measure it in pips. When you want to measure your pips, you use this to measure. So your entry should be around. So your entry level is here. Then your stop loss, because I'm buying, so my stop loss. This will be my stop loss. This will be the region where if price come to hit me, I'm going to make this automatic. If price comes to this zone, I want the broker to take me out. So, and then if price comes to this zone, if I'm making profit and price get to this zone, I want the broker to take me out. So this is just the measuring tool. You use it to measure your profit and your losses. So take profit and you call it take profit, and you have stop loss. You'll be hearing that most often. So we have the short position for the short position, and we have for the long position too. So most of the time when you see me post, I post this a lot. People don't understand. People don't understand. So it's just a measuring tool for you. So when you see price entering the blue, it means okay, you're making profit. Everybody, you can customize it. You can just click on it and just go here and customize it. So when you see this entering the red, and that means I'm taking a hit. And this will give you like your risk reward ratio. Most of the time you see the risk reward ratio. So 1:2. If I'm risking $100, how much am I making? If I'm risking $100 on this, I'm making $250 on this, because it's 1:2.5. If I'm risking $1,000, I'm making 2,550. 2,500. That is what I'm risking. So this is just a measuring tool. And we have the long. We have this one. So this is a channel. Okay, so now let me combine. Let me show you a typical. Let me add on to what we learned the other time on the trend line. We have this as, imagine you are doing your analysis. Okay, so you have your analysis, and probably, let's say price was around, I took a trade around this zone. Let me show you. Price was around this zone. Typical analysis, or a typical way you approach them. So price was around this zone. So this whole candle hasn't formed yet. We don't know what will happen. We don't know whether it will go down or up. So right now, if price was around this zone, okay. So right now, what I do is I look at the higher time frame. What the price come and do over here? You switch, go back to your left side. Then I had a zone. Price came to tap this zone over here. Now I'm just building up. Price came to tap on the 4 hour candle. So this we have the 4 hour time frame. Price came to tap this zone here. Okay, price came to tap this zone, but I missed here, so I can't enter over here. So price is around this zone. Price has entered, has touched this zone. Okay, right now I'm interested. I saw some rejection over here. Then I move to the smaller time frame to get an maybe consider entering just right after this candle. Sorry, just entering right after this candle, maybe after this closer candle. I put my stop loss here, beneath here. Right now my take profit is what? 1:2, 2.4, 2.4. But up to now it hasn't gotten to that the place I'll take my profit yet. 2.5. So if I'm risking $100, I'm getting 250. My take profit hasn't gotten to, but it's been days. Let me say an entire 1, 2, 3, 4, 5 days, but still my target hasn't been reached. So I'll still have to wait for it to get to my target. Okay, then if I were to be an intraday trader, I'll go to like the 15 minutes. I'll use the same strategy again that I use on the 4 hour. So I had a structure here. So first of all, the 4 hour I had a structure. Let me show you the structure. I had a structure here. You can see a structure around this zone. I had a structure here. You had another structure here. And now you can see that before this candle, there was a push on the preview. If you've not watched my previous video, you don't understand this. So there was a push. And you can see a trend around this zone. I don't like using trend lines. Honestly speaking, I don't like using trend lines because I need to adjust it and all those things. I like using So you can see there is a trend. Price came back to this zone, broke the trend, came back to this zone again, and it's now going up again. So as you can see, you have price breaking the structure, again. So you have structures being broken. So price can literally tap here and move to the upside and break the structure, depending on how or what you see on the market or whatever you add to say, okay, looking at what price is doing, I'm targeting this range or targeting above here. But you need to wait. As a swing trader, you need to wait because your price has already gotten to halfway. It's just halfway through, so you need to wait. But for an intraday trader, you use the same strategy over here. You had a break of structure and you had your push, you had your demand zone. This is your demand zone. I showed you how I draw my demand zone. People have so many traders have different types of way to identify a demand zone and a supply zone. So this is my demand zone. I identify my demand zone. Then after that, so price has touched there. You see that when immediately price touched there, price rallied up. Another one was over here. Price touched there, price rallied up. So right now I'm repeating the same thing over here. Then I go to the smaller time frame. So I go to let me remove this one. So that one we're targeting 2.5, right? So I go to the smaller time frame. look at, okay, where is price? We have 50 minutes, so we have here price coming back to this zone, price coming back to this zone and tapping around this zone and rallying up. We had this zone 2 here. So if you look at it, if you paid attention, I was looking at these two zones. And now you get a measuring tool here. Okay, so let me use, I didn't check, let me use the long. So you can see that on the 15 minutes you would have gotten a shorter, you would have exited earlier way, but just that you just need to double up your lot size to catch him. And a smaller time frame you have 50 pips instead of you are rixing 50 pips, and he is rixing around maybe I think 200 or something. Yeah, 200 or something. So 50 pips, then you can get around 500 pips depending on your wildness. But if you are using the same 2.5, let me say 2.5. So 2.5 within some 1, 2, 3, 4, 5 candles, then you are done. Within some 1 or 2, 3 candles, then you are done for the day, and you've closed for the day. So that's the difference between a swing trader and a day trader. So the swing trader, they act on a smaller time frame. They combine the bigger time frame and the smaller time frame to make a decision or to take a trade or to have a bias. That's the same way from the higher time frame, from the monthly to the 4 hour. So they execute their trade on the 4 hour based on what they see on the higher time frame. So because I'm an intraday trader, I started from the daily to the 4 hour, then to the 15 minutes. That is how you need to do it. You need to do it from the top. You need to do top down analysis from the top to the bottom. So you need to execute your trade on a lower time frame. So imagine you're a swing trader. You start from the monthly, then you execute on the 4 hour or the daily, depending on how long you want to hold it. But the higher time frames has strong and better confirmation. On the higher time frame you have strong and better confirmation. That one there, no doubt. The smaller time frame you have noise, so you need to complement the smaller time frame with the higher time frame to get a solid bias. That will be the advice I'll give you. Alright, so after this, let's take another example. Let's look another example. Let me use this week. This week I had let me use this. So you had a break of structure. So first of all, you need to have your break of structure. You need to have your break of structure. Then after that, you have your zone, your demand zone. You draw your demand zone, or you can literally use this side because there's a gap. You have a gap over here. You have a gap over here. So this is on the 4 hour. So I'm giving you an example using maybe combining my strategy with the time frames, like how I switch with the time frames. So you need to at least have 2 time frames that are aligned, that are going. So you need to have the higher time frame. Maybe if it's a daily and the 4 hour, which are aligned, then you use the 15 minutes to go in that direction. So that's one trick about trading, because the higher time frame are very strong and they'll give you stronger bias. Yeah, so now so I have the 4 hour over here. You have this the 4 hour chart. So you have your 4 hour demand zone. This is your 4 hour demand zone. Then after that, I move to the smaller time frame, which is the 15 minutes, to get a refined because I don't want to stay longer in the market, to get a refined trade. So using the same analogy, or using the same mindset again, we had a break of structure around this zone, another break of structure around this zone. So there's a break of structure. You can see the price broke the structure. Price broke the structure, but immediately it broke and a candlestick entered again. So right now, what am I looking out for? Let me go to, I was in the 15 minutes is a bit messy, so let me go to the 30 minutes. So the 30 minutes I can see, 30 minutes I can't see any level around the zone. I can't see any gap. Let me check the 1 hour. So the 1 hour, you can see that I have a gap over here. You can see clearly from this zone I have a gap over here. So have you seen the way I've used the 1 hour? I've used the 30 minutes to check whether I have a gap over there. So I didn't see it on the 15 minutes, I didn't see it on the 30 minutes, and I went to the 1 hour. So I can still take my trade here. So I can just take my trade here based on this rejection over here. I've seen the way price is rejecting the zone, so that means there are orders over there, or there are people who want to enter the market around this zone. So or price wants to do this thing. So first of all, so if you want to target 1:3, you have your 1:3 here, hit. If you want to, if you are a greedy person and you want to go more, or you want to go above the structure, you can go above the structure. You can go above the structure. Go above the bar. Bear in mind, the more you stretch your take profit, the longer you are going to stay in the market. So you can see this is the 1 hour, but when you look at the 4 hour, you see that you have different view and different risk reward. Different view and you have different risk reward. So when you look at the 4 hour, you can see that probably you might enter around this candle, this close candle, or here. You might even enter here. You might enter around this zone, because this candle, then you put your stop loss around this zone, around here. Then your target will be around the top here. But it's the same trade, or buyer. It's different views. It's different views. Or if you can literally use the same, or this side, you can use here this candle. You can use this candle, or you can use the tap here. So depending, maybe you might extend it to this side, depending. But the 1 hour would have given you a more refined and more risk reward, because this is giving you 7.5, and this one, when you extend it to the same level, you get 9 points. No, you get 8.7, the same 7.5, 8.2. So have you seen the way the smaller time frame is giving you more risk reward? Yeah. And if you look at this trade in particular, I had so many confluences that you need to take this trade. First of all, you had a trend line, you had a break of structure, you have the higher time frame and the smaller time frame aligning. So after they align, you got a strong confirmation that okay, this is going up. Then after that, you take the trade. So when you take the trade, you have a good risk reward too. So you could have made a ton of money out of this trade. I don't know. Let me take another example of how you use time frames. So we've used a buy position. Let me use a sell position. Let's see whether I can use this side. So first of all, you need to check for a break of structure. So where is your structure? This is your structure. We have structures broken over here. So price came all the way to this side, broke the structure all from this side, this zone. Then after that, we came back to this zone, this side. So then what will you do? You go to the smaller time frame. You go to the smaller time frame. Look for the same settings again. You had a broke of structure here. Price broke the structure. So there's a structure. You can see this side is a structure. Price broke the structure. Now came back to this zone. Came back to this zone. And now then you short around this zone. Maybe you target below the structure. So we use this side below here. So this is a clean setup and a clear day too. Like you can repeat this most often. You can repeat this most often. There's a nice setup here. So all you need to add is your timing and all those things. You need to add your timing and you need to be active on the market most often. This is repeatable every single time. This is repeatable every single time. So for instance, here like this trade like this, we have a current market here. So we have this zone, price coming back to touch this zone. Pricing, I don't know. Price has touched this zone. You go to the smaller time frame. You have a break of structure here. Right now, you have your zone over here. Obviously, price is struggling to use this zone. Then you take your sell position here. I might even take this trade. But today is a holiday, so I'll take this trade. Sell target below the structure here. It's okay. You have your 1:3. Cool. Then you're good to go. Or if you want, you can go to the smaller time frame and get a more refined risk reward. If you think that this reward is too much, you can go to the smaller time frame and get a more refined risk reward. Yeah, so I think that is it for this video. If you love the content, just hit the like button, subscribe, and follow for more content. Alright, thank you. Peace out.